You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. And, well, are you believing that inflation is here to stay? Well, you're not the only one, that's for sure. We're dealing with intransigent inflation. And what do you do about it? How do you profit? How do you cash in? How do you make money during inflationary times? It's really not that hard. Our good friend Gordon T. Long is with us now from Mattis.com. And Gordon, great to have you back.
Nice to be back, Kerry. Always enjoy talking to you.
So what do we do about inflation here?
Well, it's almost a little late to react to it. I just was just looking here at got them in front of me, the PPI numbers at 9.6%. I mean, I knew they would be up, but that even shocked me. And so it's no wonder that Powell finally had to come off his transient in terms of inflation, but he's now running so far behind that it's ironic. Here we are going to taper. We're going to take off the rate, or taper the rate of QE that we had, and accelerate that rate. But at the same time, we've got an economy that is actually really slowing right now. So you got inflation going off the roof. We got a global economy that's slowing. Everything we look at, and especially when you look at PPI absolute numbers around the world, it's called a definition of stagflation. So Powell, the Federal Reserve's got a tiger by the tail, and I'm really concerned about a massive monetary mistake here.
Yeah, well,
we'll see. So that's as much of what you have to worry about is inflation, is what he's going to do about it.
Yeah, the cure could be worse than the disease.
Because Kerry, he's trapped in so many ways. We all know that every time we raise the rates, we get another crisis. And now we've had years here with negative interest rates around the world, but certainly low rates. And the point now is when you get the Fed's funds rate, we have to keep a negative Fed's funds rate in real terms, but he can't let the positive go down, and he hasn't got much room to fight inflation. That's the problem. And so he'll accelerate taper. We can see that, and hope he doesn't get a massive market sell-off like the last time he did, so that he can raise rates faster. And I expect tomorrow he'll probably indicate that, to drive them up. But even if he does all that, as I'm suggesting, Kerry, he's got enough room, because that curve just keeps dropping lower and lower every year of how high he can actually take it. So we'll see. But I don't envy him his position.
So so as an investor, if you can go into debt for an income producing asset, you're going to come out ahead, aren't you?
An income-producing asset, exactly. That's the key. If you can find an asset that gives discounted free cash flow, and even in a tougher, slowing economy, this is like the 70s all over again, but worse. I lived through it, as you did, Kerry. And these numbers are even worse. But that's what you had to do. And this time around, we may find that bonds and that sort of thing may be good investments if you're chasing the yield side of it, and if you can hedge properly against what might happen with the currency.
Well,
so there's many ways of fighting, but the typical way is, and we should expect this, is precious metals, gold and silver, are clearly going to do well, and have been doing well up until maybe last year and a half. It's been slow.
Well, interesting thing. So used cars, we've seen the price of used cars hit all-time record highs, to the point where used cars are selling for more than they did when they were new once upon a time. And this could be a 5-year-old car selling at a higher price than its list price when it was new. Interesting thing is, everybody's been concerned about the finance arms of the automakers, especially the OEMs here in the U.S., but actually they're kind of sitting pretty because of inflation here, because their leases, the cars that they've leased out there that they will eventually regain possession of, are worth more than they were when they were first leased out, at least on a nominal basis.
Mm-hmm. Precisely. I've got a relatively new Jeep, but it's exactly what I'm seeing, and I'm getting letters from the dealership wanting to know whether I want to sell it and buy a new one, and what they're willing to offer me. It's like they want to give it's stunning. I've never seen this guy, and they're desperate, and it's been more exaggerated recently because of the shortage of product on the lot.
And even when the new cars come back, the used car market's still going to be robust because the channel has been starved of product for the past 2 years. I'm not saying go speculate in used car futures, but I'm just saying that inflation is a funny thing, and it turns things into assets that formerly you never perceived as an asset. They were wasting assets. There was no worse investment than a new car in terms of asset performance, price performance, and now it's among one of the best investments.
Exactly. What happens is, well, getting a little off track, but malinvestment starts to really show up when you have inflation and where the true value was all along. My brother owns a business, and a few years back, he decided where he was going to put all his money was in inventory. And you say, inventory? Well, your idea is to have inventory turns, and he's an accountant. He says, no, I think I want it in inventory. So he took all his cash and just kept building his inventory and building his inventory. And now his inventory as an asset is so significant as a percentage of even what he's making. And it's been appreciating at a faster rate than his real profits in the company, because those assets that he decided to keep in inventory ended up with shortages. We've recently seen that's really, really helped, but more so because it's just difficult finding those kinds of products that he's in. So sometimes you have to go against the grain or against the waves, Kerry. And this time, when inflation is this rampant, this is not untypical of these kinds of things happening.
So what was he stocking up on toilet paper futures?
I'll tell you what he was stocking up on: gun parts.
Oh, well,
he's in Canada, and he's the dominant distributor of parts and supplies to the hunting fishing community across northern Canada. And so all of them have to send the products to him to be repaired, and they need his parts to repair.
That's great.
What used to be a 40-cent part is now a $25 part.
Wow, that is
and the labor
impressive.
used to be $15. Now it's $90.
That's great. So gun parts,
and of course, so it just says there's an example too. Who can make money in the gun business, right? Isn't that they're doing everything to shut it down? But
all the more reason you can make money
for him.
Yeah,
exactly.
It was a good move. It was definitely a good move there. A lot of foresight involved. So.
Well, he just as an aside, as we were shutting down people like Remington, and there were the major firearms in the United States, we were closing them or shuttering them, tightening them up. He was literally buying parts by the carload. When I say a carload, a box carload.
Well, he was ahead of the curve for sure. So
yeah, he's not a gunsmith; he's an accountant.
That's great. Well, hey, sometimes you need an accountant to tell you where the potential is for.
Well, you can see who has the brain. You can see who has the brains in the family, right?
Yeah, here you are. You're just holding on to gold and silver, watching it go down, and he's buying up gun parts and making a fortune.
That's exactly the way.
Ironic, isn't it? So for the common person,
I keep telling him though, he's got an after-tax money. We'll see how well you really do. The Canadian government is a brutal place to pay taxes in.
Yeah, we know that. That's for sure. Well. So,
and I apologize to our Canadian listeners.
Well, you're Canadian, so you can tell the truth. But looking ahead here, so stagflation, inflation, whatever it is, what else can you do?
Don't just survive. Thrive, the Financial Survival Network.
American Eagle Gold is focused on exploring for a world-class gold deposit on its flagship property, Golden Gate, located in the Cortez Trend next door to Barrick Gold and Newmont Mining's Gold Rush and Cortez Mine. They have produced over 27 million ounces of gold. The company plans to drill and advance its relatively unexplored property and continue to focus on acquiring and advancing gold projects in the area. Vice President of Exploration Mark Bradley was at the helm of the team that discovered and defined Gold Rush and has spent the better part of 30 years working on the Cortez Trend. American Eagle trades under the symbol AEG on the TSX Venture. For more information and to sign up for notifications, go to americaneaglegold.ca.
This is the Financial Survival Network, the information you need to thrive now more than ever.
We're going to have both inflation and deflation. We have them. We've had them consistently for the last 10 years. It's just that the rate of deflation and then the rate of inflation are like waves that each time get bigger and bigger. The only thing that really shifts is our focus. If suddenly we're worried about one, then we're worried about the other. We haven't typically been as worried about inflation because the numbers are so misreported. As you know, we get into hedonics and substitution, and there's just all sorts of ways that we go through this or change them. So it's been somewhat hidden. But I think with COVID, not because of it, but the consequences of it and the shortages in the supply chain have really accelerated clearly inflation. And I'm of the school that inflation is first and foremost a monetary phenomenon. However, there's a key point. It's about sentiment. And once it takes hold, and that's what's happening now, and it has taken hold, it dramatically changes and it accelerates. And we saw that in the 70s, and then and Volcker couldn't even get it out. You can't break that attitude or sentiment, and that's what's happened now. And it's actually driving prices up as everybody starts to react to it. That's the bigger problem. And then if we in fact throw some of these bills that are going through Congress of the amount of money we are thinking of spending, Powell has no facilities to stop it.
Right.
He just doesn't have that flexibility to drive rates up. And remember, if you recall, I had a mortgage at the time. My mortgage went to 18%, Kerry, 18% to stop when Volcker was doing this to get inflation under control.
So it's a great time to have a mortgage.
Like back then.
So it's a great time to have a mortgage now, a 3% mortgage, isn't it?
Well, exactly, Kerry. But think what that means if that was to happen. I don't see that happening. But if rates went up, what would happen to housing prices? Housing prices would just plummet, absolutely plummet. Because right now, what a long-term rate, you can get them at 2-3%. So if we start to move those rates up to less than 5%, which is like nothing compared to what they used to be, it'd be crushing to housing. And as you well know, the real estate market in the United States is a huge part of our economy.
Oh, yeah.
And then, of course, a lot of homeowners, I don't know what's like in Florida, but up here in the Northeast, we have significant property taxes with the houses that are getting to be a major concern for people that they may be able to afford the house, but they can't afford the cash flow for the property tax.
Yeah, well, it's like that in Miami, too. The $2 million condo is you're paying, or $3 million, you're paying $60,000 a year in real estate taxes, just for the privilege of a $2 million condo, which $2 million, $3 million doesn't buy much compared to what it did 3-4 years ago. So the actual, and that's not even including the debt service, no doubt. Most people have mortgages, although a larger percentage than ever don't have mortgages. But certainly having a mortgage, hyper leveraging, this is an economy you want to hyper leverage in, but you don't want to be on the hook when it all comes crashing down, right?
Yeah, well, if I'm a mortgage, you better hope that it's fixed. But also, just the value of the housing. But, Kerry, right now there's negative issues we can go on, but there's also just so many positives. Because when you kind of get this kinds of dislocations, as we mentioned right at the beginning, the opportunities start to surface. And right now I'm looking at the fear index. I have never seen a market high with this level of fear. Usually it's overly optimistic. And so that means there's major disconnects. And when you look at for example, the top 10 accounts, because it's market capitalization, are totally driving the market. We've been involved heavily in following the mem stocks and the gamma trading that's going on in the options market. And look at what Tesla, $1.2 trillion corporation, which is trading like a penny stock in the options market. Mm-hmm. No wonder Musk just took out close to $10 billion out of the market.
Well, he had to pay taxes.
So, yeah, exactly. Well, actually, he was claiming he had to sell a big chunk to pay taxes on it because a lot of it was stock options coming through.
Once you exercise the options, depending how they're written, it's a taxable event, and you got to pay taxes on it. And he had a, 10-figure, 10-figure tax bill. That'll help the deficit a little bit this quarter. Right, Gordon? Does anybody even care about the deficit anymore?
I do, but I seem to be one of those old cronies that just pay attention to that and money supply and whatever. And it doesn't matter until it matters, to be trite.
Yeah.
But right now, when you get the deficits that we have, the twin deficits, and our current account, trade, and fiscal deficits, eventually it always mirrors the dollar mirrors that. So that says a dollar at some point has got to come down and come down fairly significant if it tracks as it always historically has.
Agreed there. So the top 3 investments for stagflationary times, assuming that we don't have an economic collapse and we just kind of muddle along with inflation and just inflation, deflation, just assume it's 1970s redux. What are your top 3 investment theses?
They're all hard asses, and they continue to be. So you just got to go through where your best hard assets, and of course you start with precious metals, and you can pick your choice. Our favorite in that category is silver. Followed quickly with gold, but not quite yet. We're a little ways to go here before that happens. A lot of it has to do, as we were talking about, Basel III, and just how that unfolds, because as you know, in it, they're changing how the accounting is done for precious metals, gold and that, or in terms that on their books, they can't use futures contracts and they can't use unallocated product around gold or silver.
Right.
So now it's got to be real product. Mm-hmm. And as you know, the manipulation in this market is centered in those uses of the disconnect between physical paper. So in some way, there has to be an adjustment there. And Kerry, we're seeing the central banks quietly continuing to really buy gold. We're watching Singapore. The amount that they've been buying is really because of what's happening in Hong Kong. Mm-hmm. Turkey, Hungary, Serbia, Poland. If you go through them, I think the central banks are close to 400 billion quietly. In a lot of these countries that are moving. Now, that's been going on for a while.
Sure.
And I think that they've looked at the last 2 years as been a major buying opportunity. It's been a long time since I've seen central banks buying like this. Matter of fact, I've got to go back to the 70s, actually, before we got into the leasing gold business. So that's where I would start in a hard assets. I think some of the other hard assets are getting very, very expensive.
All right, real estate, et cetera. All right, Gordon, well, we appreciate you coming on. Just tell us where to find you, how to connect with you on the web.
Absolutely, Kerry. Thank you very much. Mata, MATASII.com. Newsletters, videos, a lot of the strategies that we go through, we share with the public.
All right, appreciate it, Gordon. Always welcome on the show. Got a question for Gordon myself, email me, kl@kerrylutz.com. Don't forget, sign up for your free newsletter at financialsurvivalnetwork.com. We got one going out tomorrow. Gordon, appreciate you coming on. We'll talk to you again real soon.
Thank you, Kerry. Bye.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.